Welcome to our show, Hong Kong Brief. I'm your host, Jenny. Today, we dive into some exciting stories from the vibrant city of Hong Kong. First up, we explore the fascinating world of basketball courts scattered throughout the city. Photographer Austin Bell has captured over 2,549 courts, revealing their unique locations and the vibrant community that thrives around them. His exhibition in Sheung Wan showcases not just basketball, but the beauty of these urban spaces, running until February 23rd. Next, we shift gears to the tech scene where Hong Kong is positioning itself as a global leader in Web3 innovation. With initiatives from InvestHK and platforms like the Sandbox, the city is fostering an entrepreneurial environment that attracts talent and investment. Educational programs are being integrated into local curriculums to prepare students for careers in tech and the metaverse, ensuring Hong Kong stays at the forefront of digital advancements. Lastly, we take a sobering look at the taxi industry facing challenges with an aging workforce. With a significant number of elderly drivers and rising safety concerns, proposed reforms are met with resistance. As the government examines its transport subsidy scheme amidst a projected 100 billion Hong Kong dollars deficit, the future of Hong Kong's taxi services hangs in the balance. Please stay tuned for more detailed content. CNN reports on the vibrant basketball culture in Hong Kong, where courts are ubiquitous, nestled in unexpected places like rooftops and parks. American photographer Austin Bell embarked on a 3-year project to document these courts, capturing over 58,000 images of 2,549 locations. His fascination began during a visit to the colorful Choi Hung housing project, which sparked a quest to explore the city's unique urban design through its basketball courts. Bell's work reveals the diverse uses of these spaces, showcasing how they serve as multifunctional community hubs, from choral practices to drying orange peels, reflecting the city's dense population and creative spirit. South China Morning Post highlights Hong Kong's ambition to become a global leader in Web3 technology, emphasizing the need for a supportive entrepreneurial environment. InvestHK is pivotal in attracting foreign investment and providing guidance to businesses navigating local regulations. Companies like the Sandbox are leveraging Hong Kong's unique cultural blend to innovate within the metaverse, fostering educational partnerships to equip students with essential skills for the digital economy. As Web3 continues to evolve, the city is positioned as a strategic hub for technological advancement, aiming to cultivate a rich talent ecosystem and integrate innovative practices across various sectors. South China Morning Post also addresses the pressing issues within Hong Kong's taxi industry, which is facing a crisis due to an aging driver population. With the average age of taxi drivers nearing 60, the lack of age restrictions and meaningful reforms poses serious safety risks for passengers. Advocates argue for stricter medical checks and an overhaul of the industry to attract younger drivers, as the current system fails to address the dangers associated with cognitive decline in older drivers. The call for urgent reform underscores the need for a safer transportation system, as the community grapples with the potential consequences of inaction amidst rising concerns over road safety. South China Morning Post highlights the culinary journey of Adrian Ng, a drinks entrepreneur from Hong Kong, who shares his favorite local eateries and comfort foods. Growing up with street food, Ng developed a taste for fresh ingredients after a transformative experience in Munich. He recommends Chuk Fo Taipan restaurant for barbecued meats, Shun Hing restaurant for its iconic char siu and egg rice, and Shunned cuisine for authentic dishes like braised pomelo skin. His go-to comfort food is a hearty bowl of lamb rice noodles from Yunnan Old Friend, while Yum Kun offers a delightful brunch with local beers and Thai cuisine. For a late-night treat, Hung Ling Restaurant serves delectable Chiu Chow-style dishes, including oyster congee and wasabi cuttlefish. In another report, South China Morning Post discusses the resilience of Hong Kong's stock market, which has been buoyed by a rally in Chinese technology stocks despite concerns over rising inflation in the U.S. The Hang Seng Index reached a 4-month high, driven by significant gains in companies like Alibaba and Meituan. Analysts attribute this rally to the positive sentiment surrounding DeepSeek, a Chinese AI startup, which is expected to enhance the appeal of the nation's tech stocks. As traders adjust their expectations for Federal Reserve interest rate cuts, major Asia-Pacific markets also showed positive movements, indicating a broader regional recovery. Lastly, the South China Morning Post covers CATL's ambitious plans for global dominance in the electric vehicle battery market through a substantial IPO in Hong Kong. As the largest EV battery producer in China, CATL aims to raise at least $5 billion to expand its overseas operations and enhance its competitive edge against rivals like LG Energy Solution. With a significant portion of its revenue coming from international sales, the company is strategically positioning itself to mitigate risks associated with currency fluctuations and trade tariffs. The IPO will support its investments in overseas factories, crucial for maintaining its leading market share and driving growth in the rapidly evolving EV landscape. South China Morning Post reports that Hong Kong's public school educators withdrew a staggering 8.7 billion Hong Kong dollars, $1.1 billion US, from their pension funds during the past academic year, reflecting a significant decline from the peak withdrawal seen 2 years ago amid a surge in emigration. The number of teachers leaving the profession has also decreased, with 2,603 departures recorded in the 2023-24 academic year, down from over 3,500 in the previous years. This trend indicates a potential easing of the teacher exodus that had been escalating since the introduction of the National Security Law in 2020. Despite the reduction in withdrawals, challenges remain in hiring teachers for specific subjects, as noted by educational leaders. South China Morning Post also highlights the struggles of Hong Kong's top female triathlete, Bailey Brown, who is facing a setback in her recovery from a severe finger injury that will prevent her from competing in the upcoming Asia Triathlon Cup in Malaysia. Brown's injury, sustained during a training run, required multiple surgeries, and while her coach remains optimistic about her return to training, time is running short as she prepares for the Asian Sprint Championships. Other athletes in the triathlon community are also navigating their own challenges, with some returning from injuries and others achieving personal bests in recent competitions. The competitive landscape appears promising, albeit with limited representation compared to other countries. Nikkei Asia reports on the poignant decision of activist investor David Webb to close his influential website database, a resource he has maintained for over 2 decades, due to his deteriorating health from cancer. Webb's database has served as a vital tool for transparency in Hong Kong's corporate landscape, providing critical information for investors and researchers. As he plans the gradual shutdown of this project, he expresses regret over unfinished work and concerns about the future of the city's governance. Despite his declining health, Webb hopes to see a continuation of his efforts to enhance corporate governance in Hong Kong, although attempts to transfer the database to a university have been stymied by the current political climate. His legacy as a champion for shareholder rights remains significant, even as he prepares to step back from public life. South China Morning Post highlights the urgent need for Hong Kong to diversify its tourism offerings beyond luxury retail, which has seen a significant decline in its contribution to overnight tourism receipts. With the allure of monoculture shopping waning, the city must embrace its rich local culture, natural beauty, and culinary delights. The new territories, with their untamed wilderness and vibrant local communities, present an opportunity for revitalization through smart marketing and managed exploration. By tapping into local food circuits and unique experiences, Hong Kong can create a more engaging environment for both tourists and residents, moving away from a reliance on high-end shopping. In another piece, South China Morning Post reports on HSBC's recent mortgage rate cuts aimed at easing the financial burden on homebuyers in a struggling property market. With new fixed-rate plans introduced, the bank aims to attract buyers amid high interest rates and economic uncertainty. However, experts remain skeptical about the impact of these changes, as the overall market is still constrained by high property prices and cautious investor sentiment. Despite some improvements in home sales, the long-term outlook remains bleak, and analysts suggest that significant support for the market will only emerge with improved economic conditions and relaxed policies. Lastly, in a SCMP opinion piece, the introduction of repurchase agreements, repos, is seen as a strategic move to enhance Hong Kong's position in the global financial landscape. This Repo Connect initiative allows foreign investors to use Chinese domestic bonds as collateral, promoting liquidity and easing capital controls. As China seeks to internationalize the yuan and open its capital markets, Hong Kong stands to benefit from its monopoly on the offshore repo market. The move underscores Beijing's commitment to supporting Hong Kong as a financial hub, especially in light of increasing global protectionism, and reflects a broader strategy to enhance trade and technological cooperation. Nikkei Asia reports that the recent emergence of DeepSeek, a startup specializing in artificial intelligence, has reignited investor interest in Chinese tech stocks, offsetting concerns over weak domestic demand and U.S. tariffs. The Hang Seng Index, which includes major players like Tencent and Alibaba, has surged nearly 9% since the start of the year, outperforming other Asian equity benchmarks. The excitement is largely driven by DeepSeek's innovative generative AI model that claims superior performance at a lower cost than its U.S. counterparts. This has sparked a flurry of partnerships among Chinese companies eager to integrate DeepSeek's technology, leading to significant stock price increases across the board. Analysts suggest that this renewed enthusiasm is shifting global investors' perceptions of China's tech landscape, signaling a potential closing of the AI development gap with the U.S. South China Morning Post highlights the buzz among Chinese iOS developers following Apple's partnership with Alibaba, which will integrate Alibaba's AI models into the iPhone. This collaboration is seen as a significant opportunity for local developers, especially as Apple seeks to regain its footing in the competitive Chinese smartphone market. Developers are optimistic that the integration of Alibaba's cutting-edge AI will enhance their app features and efficiency, despite concerns about the costs associated with running AI models. The news has already positively impacted the stock prices of both Apple and Alibaba, indicating strong market sentiment surrounding this partnership. As Apple navigates regulatory challenges in China, the anticipation builds for the upcoming developer conference where more details about Apple Intelligence might be revealed. South China Morning Post also reports on the ongoing trend of property asset sales in Hong Kong, as investors like the family of minibus tycoon Ma Amuk sell off high-value properties at significant discounts amid rising interest rates. The Ma family is divesting floors of the center, once the world's most expensive skyscraper, at a 34% discount from 2018 prices, reflecting the broader market slump. This trend is expected to continue, with more financially strained owners looking to offload assets as the rental outlook remains poor and banks exercise caution in lending. The competitive retail environment is also affecting various sectors, prompting owners of industrial buildings and commercial properties to seek buyers. Despite a slight improvement in transactions late last year, the current market dynamics suggest that supply is outpacing demand, leading to further price reductions and sales. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.